Welcome everyone. So in this recording, I will be doing the mock exam from Milpark Education. So the name of the module is Principles of Accounting, and the module code is ACCP 025. So guys, as you can see here, this is a summative assessment mock exam. Students are given 2 hours to finish the paper, and the paper is out of 70 marks. So this is a closed book exam. So the only thing that students are allowed to bring into the exam hall is the calculator. So you are not allowed to bring anything else, but only the calculator is allowed into the exam hall. So let me check if I'm able to zoom here. All right, so this is the question, guys. It's section B, which is out of the remarks. This is paragraph questions. So we have question 1 of section B, which is out of 15 marks, and it is a compulsory question. So before we read these transactions, let us go to required first. So required, they want us to show the effects of the above transactions in the accounting equation by inserting the correct amount under the suitable column. So let us analyze the formats that they want us to use to record these transactions in the accounting equation. So the first column, we're going to write the number of transactions, and then we have the assets section. So we know, guys, that assets increase on the debit side, and then assets decrease, and assets decrease on the credit side. So anything that increases the value of assets will be recorded on the debit side, and anything that decreases the value of assets will be recorded on the credit side. And we have another section of the equation, which is known as equity. So we know that in terms of debit and credit, equity accounts increase on the credit side and decrease on the debit side. So anything that increases the value of equity will be recorded on the credit side, and anything that decreases the value of equity should be recorded on the debit side. So the last section of the equation is liabilities section. So in terms of debit and credit, liabilities increase on the credit side and decrease on the debit side. So anything that increases the value of liabilities, we're gonna record it on the credit side, and anything that reduces the value of liabilities, we're gonna record it on the debit side. So guys, I hope it is clear. Now let us read the transactions that we are given. Piedmont Pty Limited is a small company that manufactures steel in Johannesburg. The company's year end is 30 June 2016. The following transactions occurred during the financial year. So transaction number 1. The company purchased an office building worth 200,000 on credit from a private property developer. Guys, remember the principle. Number 1, step 1, identify 2 accounts affected. So now, can we identify 2 accounts that are affected here? So the first account is building. So this is an asset, guys. So building is an asset. So I will put A to show that this will affect the asset section. And this building has been purchased or acquired on credit. So guys, the second account will be the creditors account. So our debt or liabilities will increase. So guys, a creditors account or creditors control account is a liability. So liabilities increase on the credit side. We already know that. So now, how do we show the effect of this transaction in the equation? So maybe before we go to the equation, let us allow me to explain this. So guys, our assets, the value of our assets will increase because now we're gonna be having more buildings. So the value of assets will increase because of the new building that has been acquired. And then this building has been acquired on credit. So also the value of liabilities will increase. So we will now owe more to creditors because we have acquired the building on credit. So the balance that we are owing to creditors will increase. So the value of debt, the value of liabilities will increase as well. So now this is an asset, and we are saying the value of our asset is increasing. So between debit and credit, which side do we reflect the increase in the value of assets. So we know that assets, when they increase, we debit them because assets increases on the debit side. So this is DR. So meaning we're going to debit the assets account, and liabilities increase on the credit side. So now we can show the effect in the equation. So this is transaction number 1. So under asset column, we said the value of asset will increase because of the new building acquired. So we're gonna debit 200,000 under assets, and this will affect the liabilities section of the equation. So our liabilities, they are going up. So our debts are increasing because we have acquired the building on credit. So we are owing more to our creditors now. And then next transaction, number 2, cash sales of steel to customers, 15,000. So here we have sold our product, which is a steel. So this product has been sold for cash. So guys, every time when you see cash in the transaction, you should know that the bank is affected. So this cash that we have received from customers will be deposited into the bank account. So bank is the first transaction that is acquired, and it's the first account that is affected by this transaction. And the sales is the second account that is affected. So 2 accounts affected, it's bank and sales. So guys, remember the principle I told you during our life lesson. So I told you that all income accounts increase the value of equity. So sales is one of the income accounts. So we're gonna increase the equity because we have an income account, and then bank will also increase because the amount that we have received from our customers will be deposited into the bank. So the bank balance will go up. So now we are showing the effect in the equation. So bank is an asset, and the value of assets increases on the credit side. So 15,000 is debited, and then we have an income account which is sales. So sales increase the owner's equity. So owner's equity increase on the credit side, 15,000. Now we are moving to the next one, number 3. Paid a supplier 45,000 as part of account settlement of the account 2. So here we had this supplier that we were owing 45,000. So now we have decided to settle the balance that we were owing to the supplier. So the account that will be affected is going to be bank, because when we make the payment, we use money from the bank. So when we make the payment, our bank balance is getting reduced. So bank will be affected. So this supplier is, it's someone whom we were owing. So anyone whom we owe, we refer to that person as a creditor. So this supplier that we are owing was one of our creditors. So now, since we are making the payment, it means we are reducing the value of debts that we are having. We are reducing the value of liabilities that we are having. So obviously, we're gonna debit the liability account, and we're gonna credit the asset account, which is bank. So let me record this so that you can follow. So it's transaction number 3. So we are making the payment to one of our creditors. So when we make the payment, our bank, which is an asset account, is being reduced. So when the value of asset is being reduced, we credit, or we show that on the credit side. So 45,000. So bank has been reduced. So that is why we show 45,000 on the credit side. And then we had a liability of 45,000, but now we have cancelled the liability because we have made the payment. So when we cancel the liability, it means we are reducing the liability. So liabilities decrease on the debit side. So 45,000. So we're going to show this on the debit side of liabilities because it indicates that we have indeed reduced the value of the debt that we are having. Now we move on to the next one, number 4. Interest, I received interest income on fixed deposit account of 1.5 from the bank. So we have the amount that we have fixed with the bank. So the bank has paid us the interest of 1.5. So guys, 2 accounts affected. It's going to be the interest income. So remember, all income increase the value of equity. And then the second account affected, obviously, is going to be bank, because the interest that you are receiving will be deposited into our bank account. So now we show the effect in the equation. So this is transaction number 4. So our bank, which is an asset, is the value of our bank account. Bank balance will increase because of the 1.5 that we received as interest from the bank. And this is an income. So all income increase the owner's equity. So owner's equity increase on the credit side. So 1.5 will be credited under owner's equity because it is an income, and all income accounts increase the value of equity. I hope, guys, I am making sense. Number 5, pay the local municipality 4,200 in respect of water and electricity. So we are making the payment. So obvious bank will be affected. So this payment we are making to the local municipality in respect of water and electricity. So water and electricity is the second account affected. So water and electricity is an expense account. So you should remember the principle now. All expenses reduces the all expense account reduces the value of equity. So if you have an expense account, you should know that it will decrease the value of equity. So now 4.2 is being paid to the municipality. So our bank balance is getting reduced. Mind you, bank is an asset. So the balance is decreasing. So transaction number 5. So our bank balance is decreasing because we are making the payment to the bank. So assets is, bank is an asset. So it is getting reduced. So we're gonna credit the 4.2 because asset decreases on the credit side. So every time, guys, when we are making the payment, our bank will be credited, bank account will be credited. And then we are paying for water and electricity, which is an expense. And guys, expense accounts decrease the value of equity. So the value of equity decreases on the debit side. So it is negative on the debit side. So on the debit side, we're going to show the 4.2. Then we are done. Now we can move on to the next one, number 6. Bought office furniture for cash. For how much? 30,500. So office furniture is the account affected, account number 1 affected. And the second one is bank. Every time when cash is involved, bank is affected. So 2 accounts affected is furniture and bank. So furniture is an asset account and bank is an asset account. So now what will happen to the value of our assets since we have acquired the new one? So since we have bought the new furniture, the value of our furniture will increase. So we're gonna show that on the debit side. But however, the other asset account, which is bank, is being reduced because we have made the payment of 30,500 in respect of the furniture acquired. So now this is how we're gonna show this in the equation. So number 6, transaction number 6. So the value of furniture, which is an asset, will increase because we've acquired the new one. So we're gonna show that on the debit side. So 3,500. 3,500. Then bank is an asset account and it is getting reduced because we are making the payment to the supplier of the furniture. So we're gonna credit bank for how much? 3,500. So guys, this is how we treat this transaction. So number 7, sold still on credit to a customer, 2.5. So here we are selling. When we sell, obviously the account that will be affected will be sales account, which is an income. So here we are selling on credit to a customer. So the customer hasn't paid us. So we're gonna record this customer in the debtors control. So all the customers that are owing us, we record them in the debtors control. So this customer, now becomes one of our debtors because the customer hasn't paid us. So we have given the product to the customer, but the customer is still owing us. So debtors are regarded as assets. So I hope you know that, guys. So how are we going to address this? So now we are having more debtors. So the value of debtors increases. So debtors are our assets. So we're going to show that on the debit side of assets. So it's number 7. So we have sold on credit. So we have sold on credits for how much? So 2.5. So now since we have sold that's still on credit, we have created the new debtor. So a debtor is an asset. So now we are having more debtors. So the value of our debtors will increase. So remember, our debtors are part of our assets. So when they increase, we record that on the debit side, 2.5. And then the other account we were selling. So we have sales, which is an income. So all income accounts increase the equity. So under equity, on the credit side of equity, we're gonna show the 2.5. So this is an income we are selling. So sales, guys, whether cash or credit sale, that will be recorded as an income. So all sales, both cash and credit, they are part of income. So all income account increase the owner's equity, the value of owner's equity. And then the last one, number 8. This is the last one. Account for depreciation on the office furniture, 3.5. So guys, we know, okay, 2 accounts affected, it's depreciation and furniture. So guys, we know that the depreciation amount reduces the value of our assets. So the value of furniture will be reduced because of the depreciation. And the depreciation is an expense account. So all expense accounts decrease the value of equity. So now how do we show this in the equation? It's now transaction number 8. So we said the value of furniture will decrease because of depreciation. So depreciation reduces the value of assets. So our assets in this case is the furniture. So the value of furniture will decrease by 3.5, which is the depreciation. So because depreciation reduces the value of assets, we're gonna show that on the credit side, because assets decreases on the credit side. So we're gonna show 2.5 here. And guys, depreciation is an expense. So all expense accounts reduces the value of equity, 2.5. So this depreciation amount, we're gonna show it under owner's equity on the debit side because it is an expense. So expenses decreases the value of equity. So guys, I hope you are happy. This is how you answer this section of the question 1. So by so doing, you have earned yourself 15 marks. So guys, I hope you understood everything that I've explained here. Should you have any question, feel free to ask. So guys, I always get excited when students ask questions because I find joy in helping students. So don't hesitate to ask any question that you might be having after watching this recording. So guys, thank you for your time and goodbye.